It was a very, very fun time to be in the space, and central to that is doing the work, participating in the right deals, not just getting the upside of the equity, but also getting that and multiplication factor that's afforded by the warrants. We've returned $56 million to our shareholders, and we're planning an additional $20 million distribution that'll likely happen sometime in September. Made in America Gold, forming a joint venture on just one of the assets, I think will take that silo from obscurity into the forefront.
All right, today we're having a chat with Collin Kettell, CEO of Palisades Goldcorp, an interesting way to potentially play gold, as the company holds interesting investments in gold juniors, developers, as well as gold producers, and the company is currently trading well below those investment assets on the stock market today. So before we dive into all that, and there's a lot of threads to pull there, Collin, perhaps we can start with the basics. Really, what is Palisades Goldcorp all about, and how did the company get here?
Yeah, happy to. Thanks for having me on the program. Palisades Goldcorp started in 2020. There was a company called Palisades Global that was founded a few years before that and was a private company, but Palisades Goldcorp, as it is today, is a Canadian investment company founded in 2020, and we went public in or around the beginning of 2023. We currently have a net asset base of around $130 million Canadian, and as you suggested, our share price is trading at a relatively significant discount to our net asset value. So our market cap today is probably around $100 million. And I know that we'll dive into a little bit more what's in the portfolio, but that calculation prescribes zero value to our Made in America Gold portfolio. So that's a 100% owned subsidiary that we founded and have. It's the largest junior landholder in the state of Nevada, which is, of course, the #1 gold jurisdiction in the world. And then we also have a 100 million pound uranium equivalent resource at our Eco Ridge project in Elliott Lake. So there's quite a bit in there. But to step back a second, what is Palisades? What is the purpose of it? It's where I do most of my incubation, as well as the supporters that I have around me. Most of the companies that I've founded or invest in is done through Palisades, and Palisades is designed for people that have a keen interest on the gold space, particularly the junior gold space, and instead of doing all of the research as there is much required to not step on landmines, it's a bit of a one-stop shop for people to buy our shares and get what we think is really levered exposure to a move in junior equities.
Perfect. Thanks for that overview there, Collin. And you started outlining there, this is really the place where you incubate. And there's a history with your largest holding right now. Perhaps you can outline really what that is all about.
Definitely. So I think first and foremost, we're company builders. I really love and believe in exploration. It's an exciting game. It is risky, of course, but when you find something, a single drill hole can have $100 million implications, and it's very hard to find that in other businesses. I also grew up in a household that was in the junior mining space, so a bit not by choice, but I certainly caught the bug. And so Palisades is first and foremost a company builder. That has been where the vast majority of the value that we've either distributed out or created has come from. And the couple obvious ones to point to would be we founded a company in 2016 called Palisade Resources. That company is now called Newfound Gold. And from Newfound Gold spun out another company that eventually became Nevada King. And so today, both of those companies are publicly listed. In the case of Newfound Gold, we remain a very large shareholder of it. In the case of Nevada King, our shareholders remain large shareholders because we distributed those shares out to shareholders. And very unique to us, hard to find in other places in the venture market. We've returned $56 million to our shareholders, and we're planning an additional $20 million distribution that'll likely happen sometime in September of Newfound Gold shares. So this really is a company that is built by the shareholders, for the shareholders. We really are averse to any dilution, and we're here to try to make money. That's not always a simple path. It hasn't always been easy, especially over the last few years, but we think we're emerging into better times ahead, and that's when things can get very, very fun.
Yeah, definitely. And on Nevada King Gold, we recently did an in-depth interview on that story. Link will be in the description down below with John. But on that story, even though you might not hold a direct asset holding, I believe you also have an NSR on that Atlanta project.
That's right. So Palisades, through Made in America Gold, once again 100% owned subsidiary, holds a 3% blanket NSR on the Atlanta project. There are areas where there were residual NSRs from before we took the NSR, and so in those particular areas on the property, we have not encumbered above 3%. It's now a flat 3% across the whole project, and we own the net of that NSR in Made in America Gold.
Yeah, and talking about those distributions, perhaps you can outline the rationale, because of course there's a choice you're making. Either you can continue to compound within this company or you can distribute those. How do you make that choice?
Yeah, there's a lot of considerations that go into it. One of the main drivers, of course, is the tax implications. So what we've utilized on the $56 million of distributions done to date, as well as the next $20 million we're planning, is what's called paid up capital. Paid up capital is simply that we've, over the life of the company, raised $76 million as a minimum. And so we're simply returning that money back to the shareholders. And because of that, this does not qualify as a normal distribution, which would be taxed at a very high rate. Instead, it qualifies as a return of capital distribution, which all shareholders will have to do their own tax assessment. But generally speaking, it's a very low to no tax situation for the shareholders. So again, first and foremost, looking for the shareholders, we like that. We've also managed to use carry forward losses on these distributions, which means that the company, while it's using up its losses, does not create or crystallize a gain that leads to a payment to the government on the distribution. So it's very efficient. After this next distribution that we're doing, we will have used up most of our paid up capital. We'll have used up all of our losses. So I don't expect us to necessarily do another one of these anytime soon. Without that tax benefit in there, it becomes far more compelling to hold the capital in the company. And as you suggested, compound the gains within the company.
Yeah, makes complete sense. Thank you for outlining that tax benefit. Very interesting there. And talking about the distribution that's currently ongoing, or at least you're planning to do, perhaps you can quickly outline really what that is all about.
Definitely. So we own approximately 43 million shares of Newfound Gold. Those shares were almost entirely acquired very early on as we started the company. There were a couple share purchases that we did along the way, both privately and publicly, buying shares as high as several dollars a share while the company was publicly trading. And as a result of that, those 43 million shares for Palisades are worth about $100 million. That makes Palisades, at least in the eyes of the market, a bit of a one-trick pony, which is not something that we think is necessarily advantageous for Palisades, because Palisades is in fact something much more than that. But with such a high weighting to one company, we tend to trade along with that company and at a discount. So aside from all of the benefits to shareholders, the tax efficiency of the method of returning the capital, we also believe that this is going to slightly, by shifting the portfolio more towards everything else as opposed to being so strongly towards Newfound, it should unlock value through people maybe not as focused on just buying Newfound, but also everything else we're doing. We'll find the makeup of the portfolio more attractive for that purpose.
Yeah, perfect. And of course, the company isn't a one-trick pony, which is Newfound Gold. We'll talk about those other assets as well in just a second. But perhaps, of course, I know you have a history with Newfound Gold. Perhaps you can shortly summarize really what that story is all about, because it is a large part of the Palisades Goldcorp investment case. Definitely.
Yeah, no, Newfound Gold is a company that we started back in 2016. We picked up the project. It was pre-discovery. Denny Laviolette and I co-founded it together, and Denny's a great geologist. He runs a company called Earth Labs at this point, and we stapled together about 9 pieces of property and then did a large staking exercise, becoming the largest landholder in Newfoundland. And then in 2019, we drilled a hole. It was a spectacular hole. It ranked as the highest grade interval ever recorded in the province, and that then set us on a path to going public, raising hundreds of millions of dollars, attracting the likes of Eric Sprott, who's now the very largest shareholder of the company. And then what I'm maybe most proud of in the entire story is being able to pass the baton off to a group of seasoned mine builders that are going to be able to do a far better job than I would have been able to do, continuing to carry the company forward. And so today, there's a gentleman by the name of Paul Hewitt, who's the chairman. Paul is just a rock star in the industry. He sold his last 2 companies for a couple $1 billion. He's the CEO of America's Gold and Silver, which is nearly $1 billion company. And then the board brought on Keith Boyle as the CEO, and Keith has built several mines over his career. And I think there's some unique attributes to Newfound Gold that I think the market recognizes. And they've just highlighted that in this really incredible PEA that they put out. Where else are you going to find a project where you can spend $150 million and 5 years in be producing 175,000 ounces of gold a year? I've never seen it before. And so, the market has reacted positively, but I think that this is just the beginning. There's a few moving parts outlined in this PEA, like arranging a toll milling agreement with an existing mill, making sure the logistics work, going through a expedited permitting process. But if these guys pull this off, which I have no doubt that they will, the stock's going a lot higher from here, and you're going to end up seeing a classic case of the Lassonde curve exaggerated to the maximum, which was very painful, of course, on that downslope. But what's important is the result at the end of the day. We've never sold a single share of this company. And I would like to say that by the time that this thing gets into production or is acquired, that maybe we'll still be in that position. That would be a cool full circle to experience.
Yeah. You started outlining that Lassonde curve. It was exactly my follow-up question here, or at least statement I was going to make, that this company is following that trajectory to the T, and therefore there's also quite a bit of upside on the rebound once you start closer to actually developing that mine properly.
Yeah, absolutely. And I fall prey to this all the time, but we tend to invest in things that are quoted on a listed stock exchange, and that allows you every morning to wake up in a different mood and pull triggers, whether it be buys and sells. And so, people can buy something on that downslope and sell it, at a lower price, and it's a very painful experience. But being disciplined and taking that long-term approach, coming up with your thesis in advance, knowing that what you have is truly really, really good, even if the market's telling you something otherwise. We have to look to nobody other than Eric Sprott, who's the company's largest shareholder, who is a machine at this. He's had years and years to figure it out, but he takes a long-term view of things. The mining sector has very exciting periods in short periods of time, but the long-term view is so important. The companies we build take a long time to go from incubation through to going public, and in the case of Newfound, if it makes it into production, that'll be great. So I think it's important to look at and take that long-term view, and the value that can be realized over those periods is significant.
Yeah, no, 100%. And of course, thank you for outlining that as well. Building a mine is not easy, and it is a risky business to actually do so. But through Palisades, you might have the opportunity to get a leveraged bet as well as a diversified bet on that Newfound Gold story.
Absolutely. And just to note, on top of how incredible $150 million capex is to then back into production that is production scale a mid-tier would be happy to have in their portfolio. They're talking about doing this by 2027. So we're talking about, in a time frame less than 24 months. And I wouldn't be fully shocked if they managed to pull it off in a shorter time frame than that.
Yeah, no, 100%. And touching base on some of your other assets, because like I said, this isn't really a one-trick pony. I believe America Goldcorp, Made in America Goldcorp, perhaps you can shortly outline really what that is all about.
Made in America Gold started essentially at the same time as Newfound Gold. When Denny and I got together, Denny, being a Canadian geologist, wanted to focus on Canada. And thank goodness he did, because that ended up leading in many ways to us picking up Queensway and having Newfound Gold itself. Around the time that we picked that up, though, we were also acquiring projects in Nevada. And the thesis was, due to the overspending that the majors did during the peak of 2010 and 2011, they were really reeling financially from 2012 to 2016. And in that reeling, they were doing things like dropping their prime exploration ground in the most prolific gold trend in North America. And so we went ahead and started picking up these large ground packages next to some of the largest producing mines. And fast forward to today, we now have a property portfolio of 10 district-sized projects. We're by far the largest junior landholder in the state. In fact, if you include the majors, the only companies bigger than us would be Nevada Gold Mines, which is the Barrick Newmont joint venture, and Kinross Gold. And then there's us, and there's not a single junior in the top 10 list. So, we have a very, very large and high-quality portfolio of properties. And at this point in time, it is a 100% owned subsidiary of Palisades. I could not accurately predict exactly what the path is going to be for Made in America Gold. That is, it could remain as a 100% owned subsidiary. It could at some point begin the path towards becoming an independent company with a fully independent management team and conducting something like an IPO. But the business model is we have the ground. We've done work to advance the ground. And now what we're seeing is companies that are either already in Nevada or companies that want to be in Nevada have come in and picked up essentially all of the producing assets and all of the developing assets. And what that leaves is the last step in the value creation chain, which is the most exciting step being exploration. And we're seeing these companies start to ink significant sized joint ventures. And we believe we're going to be one of those such companies that starts announcing joint ventures, option deals with large companies. And through doing that, it's a great model called prospect generation. Done properly, mining titans like Rick Rule will tell you it's the most effective exploration model that they've seen in their career. And we think due to the scale and the quality of the team, the quality of the assets, we're going to be able to execute on that and generate a lot of value for our shareholders.
Yeah, prospect generating is definitely a very exciting business model to be in if you do it right. But of course, until you actually sign those joint ventures and you explore and you create value, it's just a cash drain. How do you trade that off? How do you trade that off between making a deal in the short term or waiting for the fatter pitch?
Yeah, it's been something that we've been battling with for some time. I shouldn't call it a battle because we've had our mind made up on exactly what we were going to do. We have had companies, smaller companies, come to us and talk about doing options and joint ventures, but we do want to work with companies that are willing and able to spend significant capital. For the most part, if you look at Nevada discoveries over the past 20 years, they've gotten deeper, and there's some very, very valuable ore bodies that have been discovered at depth. But deeper drilling takes a specific type of expertise and a lot of money. You're talking about drill holes that can cost $500,000 to $1 million a shot. So we want to set ourselves up for success by signing deals where somebody's going to commit to spending $20 or $30 million, not somebody coming in trying to scrape some money together to spend $3 or $4 million, which can be quite effective in upper plate geology, but a little bit tougher to have success in lower plate. So we've decided that we're going to hold out and wait for those bigger partnerships. We do think the market's getting constructive now. We're seeing more discussions, more inbounds come in about this. And in the meantime, as you pointed out, there's a cash burn. So the cash burn is about $2 million Canadian per year for us to hold all of this ground. The nice thing about Nevada, it's a pretty backward system in the U.S. that in most jurisdictions you have to spend a certain amount of money advancing the project, and that typically will ratchet up so that the government is trying to disincentivize you from holding ground for a long time unless you're showing real money and real interest in advancing it. Well, in Nevada, it's very backwards. It dates back to the 1850s Mining Act, which says you stake the ground, you pay the government your rent, and that's the only deal. And so it helps us because we have a very controlled budget. We know exactly what our costs for holding is going to be each year. As soon as we start signing joint ventures and options, we can start offloading those costs and start seeing the benefit of capital coming into our ground and getting spent on our project.
Great. Thank you for that overview there. Perhaps we can touch base on radio fuels. That's also an interesting story. You have a resource in place. What are the plans with this company?
Radio Fuels is another 100% owned subsidiary of Palisades. The project was purchased by us back in 2016, essentially out of bankruptcy when the price of uranium was down at $18 or $19 a pound. And we ended up picking the asset up for a few $100,000 off of a publicly listed company that had sported a $100 million market cap just 5 years before, and again 10 years before. And that would have been when the rare earth boom happened and the uranium boom, respectively. And so what that tells you is we have a project that reacts very well from an optionality standpoint to the price of both uranium and rare earths. It is a very large 100 million pound uranium equivalent project. The ore body starts at surface and it slopes off about 30 degrees into this basin, which is the Elliott Lake mining region. Elliott Lake is a past producer. They had over 20 mines there. It was one of the first producers in North America back in the 60s, and the mine shut down in the 80s, mostly due to competition from other areas that had higher grade. That being said, we did a 2024 work program to get ourselves fully oriented with the project and try to see what steps forward would make sense for ourselves or another company that might take this on. And what we realized is that there's a lot of similarities between the basin that makes up Elliott Lake and the basin that makes up the Athabasca. The difference is all of the exploration that went into Elliott Lake occurred from the 50s to 80s when they were looking for bulk tonnage, low grade. Nobody's come back and spent the money to look for remobilization of uranium, high-grade deposition of uranium, all of these things that we don't just believe is likely to have happened, but that we know scientifically some of those things did happen just by doing reanalysis of the core and looking through all of the data. So we think there's a bright future here. You've got two levers. You've got the upside to the uranium and rare earth prices that the project will inevitably have, and the potential to find a partner or under our own company, go ahead and advance this asset, looking for more size or higher grade uranium. So we don't know what the path is going to be. I suspect that we will find a uranium company that's backed by a strong team that's enthusiastic about the project, and in exchange for giving the project to that company, we would look for significant equity interest in the company for the benefit of our shareholders.
Yeah, and that's one of the things that draws me towards Palisades is that optionality in multiple places at the same time. I believe you also have a portfolio of some smaller positions in public companies that's you're still carrying on the book.
That's true. Outside of what we just discussed being Newfound, Made in America, and Radio Fuels, we also have about $45 million at play in various junior companies, whether they be private or public. And this is part of our incubation process. It's also part of our process to try to maximize returns. We do see a unique opportunity right now. The TSX Venture Exchange, which was threatening to break out a few months ago, has clearly broken out, but the returns are just starting to begin to crystallize. And we think that outside of how our Newfound Gold position, our Made in America Gold, our Radio Fuels might benefit from that, we think that there's a lot of other great opportunities, great teams to back, great projects to get behind. And so one way that we're doing that is actively participating in and financing these companies that have aspirations to advance things. And so there is yet another lever in the portfolio. As a result of that, we've built up a significant bank of warrants. We have positions in really high quality companies, and I think there's a lot nestled in there that unless people really take the time to figure out, is not widely recognized in terms of the potential that it could yield.
Yeah, and on top of that, I believe you already started hinting at this, but your presentation references more than 300 million warrants in different companies. If that junior market breaks out, that could be another lever to generate some upside.
Yeah, exactly. I think Warrants are potentially a very strong way to participate in a bull market move. I think people are so conditioned after being through a bear market for the better part of 15 years that warrants always expire worthless and don't generate upside returns. But going back before that, I watched firsthand what my father did participating in the space, what Phil O'Neill, who's our chief operating officer at Palisades, did during that period. And I can give name after name of people with the same story. And it was a very, very fun time to be in the space. And central to that is doing the work, participating in the right deals, not just getting the upside of the equity, but also getting that upside and multiplication factor that's afforded by the warrants. And it's something I believe thoroughly in. It's a risky space with many more losses than wins over the net, and you need something in there to incentivize people to be crazy enough to invest in this space, and that's what warrants are all about. And we think that the warrants in our portfolio could add some significant juice to the equation.
Excellent. I would love to zoom out a bit as well and talk about the company from a higher level. Perhaps we can talk about the team who you have assembled and really what the long-term vision is for the company from your perspective.
Yeah, it's a compact team. So it's myself in the position of CEO. We have a long-term CFO named Bassam Mubarak, and then Phil O'Neill, who's effectively the chief operating officer. And from a management perspective, that's it. We then, of course, have a few people that are working with us either directly or indirectly in helping us keep organized, vetting deals, executing, and also advancing the portfolios. We're going to be bringing on a really superstar CEO for Made in America Gold here in the next month or two. I'm going to not drop the name until it's officially put out in a press release, but we're excited about that. That's going to see things accelerate on the Made in America side. And then, we've got a small, nimble, but strong board as well. There's a guy by the name of Gregor Gregerson who owns and operates the largest vaulting facility in the world for precious metals in Singapore. He's on our board, and we also have a retired but very well-known lawyer out of Vancouver who's on the board. So we keep things tight. We're trying not to spend money except on the investments, and all of that to maximize the returns we think are possible in this bull market coming up.
Yeah, great, Collin. Thank you so much for your time today. Perhaps the last question I would love to ask you is really what are some of the most exciting catalysts from your side, what you're most excited for 2025?
Yeah, I think Newfound's going to surprise people here. I see sentiment really picking up, and the institutional side is really taking to Newfound. That was missing from the Newfound equation up until recently, and that's a significant amount of capital, and also a thought leader type of capital to be coming into the share structure. So I think that if this group of people can execute on the plan they just laid out in the PEA, that's going to drive the share price much higher. And with us owning so much of it, that could be really significant. Made in America Gold, forming a joint venture on just one of the assets, I think will take that silo from obscurity into the forefront and potentially establish some value in our share price for Made in America Gold. This is a company we've spent 11 years putting together. We've spent $20 million in claims fees. We've got the best ground in Nevada, and it's got a big whopping zero of a value right now in the market. Doesn't bother me at all. This is a long-term game, but I certainly will be excited when the share price reflects what we think that is worth, or at least some amount of it. So those are two. And then, if this TSX venture continues, which I'm certain it's going to, over the next few months, I think our share price is going to act as a fulcrum for that venture price into something much greater through our share price. So I think we've got a tremendous amount of leverage built up.
Yeah, no, 100%. And almost forgot to touch base on this, but of course, insider ownership in this company is quite high. So your incentives are quite aligned with those investors. And if those catalysts do play out in that way, that would be huge for you guys.
Yeah, absolutely. Management, with most of this attributed to myself, is at about 20 24% of the company, and then our second largest shareholder, should he convert his convertible note, will be right around there as well. So we've got 45% of the company held by long-term management and insiders, and a pretty tight-knit group of shareholders that are long-term beyond that. So it's a great group. It's fun to work. It's fun to wake up and work every day on this, and it's fun to be in a bull market, which is starting to feel like we are.
It's starting to feel like it. We are. No, 100%. Thank you so much, Collin, for the time. Really appreciate it. Exciting company and exciting times ahead.
Yeah, no, thanks so much. Always appreciate doing this. It's a lot of fun.